Hey guys, no fancy intro tonight. We have a lot to go over and I have a lot of data I still have to look at. Nasdaq broke. The Nasdaq Futures broke. It's very clear that it did. Here's our DTL and we can see that very clearly. We had about a 3-bar pattern here, really turned itself into a 4-bar pattern, closed at the low. Essentially what happened, and we went through this in yesterday's video, is if you know, all these videos are connected, the dot plot was off and they're looking at higher for longer, and this was bothersome to some, and this is why we acted the way that we did. Let's take a look at the basics. First, let's get rid of RSI and just focus on the key levels. Number one thing we're going to focus on is 55. What is bothering me here, if you watch these numbers over here and you just watch how they change, 57, 52 to 51, say it, 50, see the 72, it goes to 71, and then you're going to say that's not a big deal, and that goes to 66, that's not a big deal. Okay, you're getting a declining 55. And people are going to say, well, that's slight. It's just starting. When do you want to pay attention to it? You want to pay attention to it. The way to benefit from what's happening is to be first, right? Let's just call it what it is. You want to be first. You don't want to be last. Finding spots to get in, especially if you're shorting, because you can't stay forever with shorts because eventually you're going to bounce. If you look at the simplest of trend lines here, you can see that you're heading for that long-term trend line. If you were to say, well, what about from here to here? And that's your trend line, and this was the rejection. And you make that argument because you hit 3 times here. Well, you broke that one, but that's still going to take you to here. So either way, and I'm focusing on the Nasdaq for a reason, either way, you're setting up to retest this level, which is setting up to take 15,000. You do not want to break 15,000. You most certainly do not want to break 14.8. These levels in here are critical. You do not want to be breaking 14.8. You do not want to be breaking this long-term downward trend line. The probability of this being a head and shoulders, does it still exist? Yes, it does. But again, you're getting to the same exact level. So no matter what we call it, you still have to break that 14.8. And I'd be really careful here. The selling that we saw today, it just started picking up. The longer for holding off and then them moving the dot plot out, it was not what people expected in full. And you can look at yesterday's video, and I'll link that at the end, for what the dot plot was versus what it is. We have too many ideas to go through, and there's too much to focus on tonight for me to spend time on it. I'd rather focus on the ideas that could make you money tomorrow, and we'll go from there. I will walk through one trade. I do have some video on a live trade that I want to show. I will show it most likely this Saturday, so make sure you subscribe. I'm not going to have time to put that together tonight. But if you can just see where you're at right here, and here's your DTL. We talked about this, and the one thing that we did not want to do was make a lower low. It was the one thing that I just did not want to do. So here we are. And why don't I want to make a lower low? I'd rather be bullish, candidly. It's more fun when the market goes up. I don't like when the market goes down, candidly. People always say, why? Well, you hit a recession, people lose their jobs, people lose money in their 401ks. I'd rather just historically go higher, candidly, but I have to trade what's in front of me, not what I want. You can already see that decline. I don't even need to show you the numbers over here. You can already see the decline that's starting to happen. There's a lower low. So we have lower high, lower high, lower high. We have a decision to make. We couldn't hold the 55, lower low. That's where we're at, and it's not debatable anymore. And this is, whether it's a midterm change of trend or it is a long-term change of trend, really depends here. And I don't have an answer yet on what that is, and quite frankly, nobody does. But if we just take a look here, that's your long-term trend. Are you getting down there? I don't know. The one thing that I do know is looking at this. If I draw this straight across, and then of course we're going to have the head and shoulder people, and again talking about it's a head and shoulders, I don't know if it's a head and shoulders. It's sure as heck shaping up like one now, way more than it was about 3 weeks ago. So we have to respect that, and we have to look at this and trade what's in front of us and expect that the head and shoulders gang might be right. So now, especially when you made that lower low today. So we have to assume that this is a testing ground. Now, if we get to that 4420 or that 4400 candidly and we break, we have problems, and that needs to be respected. We must understand that we have issues. So when I look at the ES right now and I look at the Nasdaq, this definitely gives me pause. What else is giving me pause, without getting into any more specificity of levels for time's sake, is the VIX spike. Forget the 55 on the VIX for a second, but that we held in here and now we're closing over 55 or 15 is more of an issue than I think people realize. So let me drill into this. This is why you're going to have to be quick with options. And I'll show you a couple, or the one trade that I did. I put out a couple shorts today in the room. I only did one personally, and I just did it pretty aggressively. It's just better that way. Sometimes I like to be focused with these kinds of days just because of the news. But you see where you closed? Well, when was the last time you even closed here on an upswing? I mean, you'd have to go back to mid-August to see anything like that, the closing on an upswing after being down. It's been a month, and that's somewhat staggering. This is somewhat troubling. So I do want to watch that. I am watching the dollar like everybody else. I'm still in my trading range. Of course, I see the 200 pointing up the way that it is, and we're going to pay attention to that. And we're going to talk about that a lot on Saturday. What I do find really interesting here is XLF. Right? We're still not making lower lows. We're still hanging in here. And we're still not ultimately falling apart. Like you would think that this would be an implosion. Now, the smaller banks, they're rolling, and that's getting ugly. Now, remember, IWM, as I told you, we had a lot to go through. IWM is 15. I put this in the newsletter. If you signed up for the wait list, a letter went out tonight just letting you know that there's 12 hours left if you're on there, and then it's going to close. It'll probably close, and the wait list may close for the end of the year. So it looks and acts the worst. This is what I put in yesterday's newsletter for our community. It's 15.9% are either regional banks or regional bank kind of names. I mean, you're cracking here. You broke 180. So one of the first names that you should be looking at tomorrow, in my opinion, is going to be something like TZA. I'd be real careful with the options market and the individual names. I would look, I think that especially if you're not sophisticated and you can't watch it all the time, everyone has different preferences. I would just start looking at the bear ETFs. We started picking them up last week and we're doing fairly well, but I'll walk through the one that we picked up, but just made the most sense. But if you look at that, that's a breakout, guys. For the head and shoulders crowd, you should be able to see it, but let's just draw it out for them. You have a left shoulder here, you have a head, you have a right shoulder. Here's your neckline. It doesn't get any clearer. You're over the neckline. A higher high tomorrow, you have confirmation. This can go. This could really start moving. Remember, people always say, oh, I don't want to buy it because it's not going to get me as much. Remember, these 3X funds, they are calculated daily by the move. Now, why is that important to know? It's important to know because here we are with the SOXX. Let me clean all this off. This is when we started buying, I think at 10:30, probably, I think right here on the Taiwan semi-news, which made no sense to me, but it is what it is. Anyway, so here we are, and it's 10:30, and we started getting in 10:38, somewhere in that area we're in. And then we watched it close, and then on that Friday, we added to it into after hours, or I should say I did, and also put another alert out there to add after hours. Everyone worries, and then you have this, and then you have the move. You're setting up here, guys. If you look at this close on the SOXX, and you just draw straight across, when was the last time you were here? June. You're at 3 months highs on this. And this is exactly what I want to point out. So here, it's 3X. And let's just say that the SOXX is down 9 or 3% on the day. This would be up 9%. If you take a look at it, if you're at 10, then I'm going to move roughly, let's just call it 90 cents. If I move 9% and I'm at 11.75, I'm going to move considerably more than that. So this compounds daily. That's why these get so aggressive on the upside, and they get so aggressive when they break. And as I always say about these bear funds, they end in tears. You just don't know when that's going to be. And that's the important part of it. So I would tend to focus on the bear funds right now. That's where my head would be with it. We go through some of these names, which we're going to do, and I'm going to stick with the big dogs for a while. So this low that was in here that was put in, we broke that on the anchored VWAP. The breakdown, I put an anchored VWAP on, and I put an anchored VWAP here as well. Look where we opened and the rejection. Really, I can clean these all off. It really does not get any clearer now on what's going on with Apple. You're unable to get above the 22, the 12. Your 55 is pointing down. No one's going to ring a bell, guys. So when you start to see this kind of action, you just need to stay out of the way, let it play. And if you're not somebody that wants to short, you can do something else, like just stop trading and not fighting the tape and telling the tape that it's wrong. You don't have to do anything. And that's one of the cruxes here. You really don't have to do anything. And I think that's an important distinction that is lost on people. Now, for my purpose of this video is to point out what I think is the most obvious. This move on Apple was day one closing at the low. When I say day one, I mean it is impossible, sorry about that, it is impossible to look at that chart and think for a moment that does not have another down day. Whether it finishes down or not, It's really hard to see the eclipse of 2 bars in here and then assume that that does not have a down day. And I want to get real specific about this. So you see how you encapsulated here and you're down? That is called a Marubozu black. You see how you're just completely encapsulating everything in here? The probability of this going down tomorrow is significant. Now, does it go down and then bounce? I don't have a clue. All I'm telling you is that when this bar is set up here, it's like 60% chance that you're going lower. Do with that what you want. Here's an example of one. Here's an example of one, but it wasn't a full one. You can see the wick up here. Here's an example of one, and you can see the break, and then the rally, and then the rejection of that level, and then the roll, okay? So it's not a be-all, end-all, but it's definitely something that you want to pay attention to when you see them. You don't want to pretend that you don't see them. Let me put it to you that way. And if you take a look at Microsoft, you take a look at Apple, and you look at what's going on there, and you see these breaks, and you see these rolls over the 55, and how bad this has gotten in the short period of time, how bad this has gotten, then that is something that you have to take into account. You remember on Saturday, I said I did a swing trade in Microsoft and got stopped out almost immediately. That was information that I paid for. Even when you get stopped out of your names, you're still getting information. You're still paying for that information. And it told me I may have a problem here, and look at the reflection of that problem. That's why you honor your stops. Instead of me being in this at 337 or wherever we entered it, we're out a heck of a lot cheaper, and you're at 320 right now, wondering what you're going to do with it. So keep that in mind. Netflix, I'm going through the big dogs, and you'll see why here. See how you broke? There's no way XLC is going to hold here. There's just no way that XLC can hold here. So what we have here is we have one of the first closes on XLC under the 55. That is Google, that is Meta, that is Netflix, that is Charter. When I wrote this up last night, we were above the 55. You're sitting on it now, so now I have to watch these names tomorrow carefully. And we're already starting to see some cracks in those. Google, look at that crack. Everybody wanted to be in it. I think everybody wants to be in it right now. I know I want to be in it. I like the action in the stock, but with that kind of bar, with the way the Nasdaq and the S&P is, that is not something I can go near right now. I'm trying to deal with actionable ideas for tomorrow. And the reason is because you had a shift today in the markets. I'm doing that versus doing more of the macro overlay or doing more of the stool. What we're doing is we're looking at these from a technical standpoint and making decisions on where they could possibly go. We're pretty good here, if you've been watching this for a while, about very specific levels on where things can get to. I'll show you a couple that we did that I felt today that we could get to. You can look at the timestamps on when those were done. But if I'm looking at this and we can start getting into this, I need to understand where I'm at. I need to understand that these can roll and that they can break. The last bastion I have here is Meta. I still have a position in here, and I'm in right around this area. But candidly, this is we're just waiting at this point for that name. Now, some of the names I really want to get into, for example, NVIDIA. I have a trend line here. Let me clean this all off. I have a trend line right here that is classically developed by this third right here, third point right there, 1, 2, 3, and then you have the 4. If you got rid of this where you started and then go 1, 2, 3, that is a trend. Now, it is a short-term trend, but it is a trend just none the least. And that trend has developed and morphed and followed you into this long-term trend. Both of those are breaking, if not broken. Right, so one of the things that I pointed out, and I'll show you with the timestamps in a moment, that this had the potential to do this, and the stock was around 427, 428 when we started talking about it. We actually started looking at it later. I will work some of the live video in. I got asked a lot to show more of the live trades from the room when we did it, when we went live today. I don't have time to edit that video, candidly, but I'll have it done by Saturday. So if you look at that, does that look like something I need to be rushing into? And the answer is no. And this was classic behavior today. For example, let's clean all this off and reset this chart. Watch up, you gap fill. If you gap fill and comes back down, what are you doing the whole time? Lower highs, right? And so as you're making those lower highs, you can just see the action. And here we are on the 20th. They try to gap you over, rolls. And then this is what's been troubling me, and I talked about it yesterday. This has been troubling me, and I felt like we were going to go violently, and we did. We have Wick City lately, where you're just having these battles where you're seeing 3-point moves in 1-minute bars. It's absolutely crazy that we're seeing this kind of stuff. And what we're seeing here is we're seeing a complete breakdown of these levels. Now, one of the things that I pointed out, you can see the timestamps in here around 320, right around that 429 level. In the rooms, this is an observation room, and this is where I will post observations as the day goes on. You can see the timestamp there. It became increasingly clear that even with this, that we were just starting. And what my point was here was, one, this isn't over. You can see it very clearly. I post the statement, and then right behind it, I'll post the chart. So you can see where we are in the chart when we're talking about this. I'll get to the Tesla trade in a moment, but I want to show that for a reason, and then you can kind of look at the end of the day, and you can see where we're at. I talk about a spec play, and that patience plays, and I was cracking a joke that I thought was funny because I called a couple targets that we were off by like $1. This was one of them, but let me clean this all off. So the question is, what do you do now? What I was suggesting to people, if they wanted to spec, they could do it overnight. I don't know that you want to spec overnight in case somebody comes in and says something. I just think you're better off understanding that you are seeing a shift and that the shift can get worse. Remember, just because these are going through a cycle does not mean that you don't have waves within waves. You could still gap fill, and that does not mean that NVIDIA is done, nor did it mean NVIDIA was done when it went down here. The question is, what are you trying to accomplish? If you're trying to trade and you're trying to be a swing trader, you don't want to go from 420, 430 to 300. If you're looking out 2-3 years, you probably don't care. So it really depends on you and how you're trading. For example, I have a very long-term position in NVIDIA. I have no interest in doing anything with it, with that mentality that I have there. That said, if I'm trying to swing trade this even on a long-term swing, you can't be looking at this and be feeling warm and fuzzy. So you're going to want to just stay out of the way here and let this settle down, especially with the SOXX. I just showed you SOXX, but you want to talk about head and shoulders. Well, this one broke. Here's a left shoulder, head, right shoulder. You're below a lower low, and you have a confirmation of a head and shoulders at the top of a chart. We've been going through this for 3-4 weeks that this broke back here. Same exact break when you had this megaphone flag right there. And now you're here with the same pattern breaking down, and now you have a gap in the chart. So yeah, you can be putting tops in. I still was of the belief, and I think I'm going to run out of time, candidly, for the year. I was still of the belief that we could cycle through and then hit highs by the end of the year. I don't know how deep this is going to go, but I do know that most likely with the way we traded today, that it's probably not over, and there should be some really great trading opportunities ahead of us. And I do want to go through some of these other guys that traded today, because I think it's really very important to say that we are seeing pockets of strength, and we're also seeing some pockets of weakness that you probably didn't expect, but I want to show some of that too. So if you look at Oracle, you're seeing a pocket of strength in here. You're trying to hold, but at the end of the day, I did a trade in this, a day trade, and traded up, but we held that opening price. If we rally, you want to look at the ones that were actually green to flat today. This was one of them, and it's definitely one that I would pay attention to. Tesla was a trade that we did in the community live today when the Fed came out with the news. And to hammer home the point on the news one more time, it wasn't that they didn't cut. You'll note when we moved. When the dot plot changed, which we will go over on Saturday, make sure you watch Saturday's video. We're going to get really into the dot plot, why it's important, what it's telling us. But what I want you to really take from this is when they found out that longer, rates staying higher for longer and pushing the rate cuts out 6 months is what that plot is telling them. That's when we saw the selling come in. That's when we started to see the shooting star. And I want to point this out, be real clear here. If you've been following for some time, there are certain patterns that I see that I've coined, whether or not someone else has coined them or there's something else. You can always comment below, but I call these devil horns. When you have this spike up, you have another spike, and it looks like this. It looks like devil horns in a face to me, and so I just always coined it that. You'll hear it when I play the live recording later on Saturday. And what I was trying to do is I was trying to get ahead of this, because I knew when it cracked, it was going to crack, and you'll hear it on the live tape. But if you take a look at these levels and how this was playing out right in here, and I'll just show you this at the 270, all they did was keep playing with us at that level. Down, and then they broke you back up. Again. Then you rallied up. He speaks. Again. I had 2 entries. One did not work in here, where they lifted me up. And if you take a look right here at the highs, you'll see something. That's 21.13 right there. Here, let me show you what I'm looking at. So I'm looking at these numbers right up here. You'll see this one, 271.13. Look at the one right next to it, 271.20. What happened? They took me out and they brought it back down. Then they went sideways, and then I kept looking at it and going, there's no way this holds. And it was very clear by the pattern that it wasn't going to hold. But it doesn't mean he still can't stop you out. So I re-entered with puts. And then we just, we wrote this down, and I was looking for 261. I'll show you the alerts in a second. I was typing them while we were trading live. But what I'm saying here is that we're trimming into the weakness. We're starting to crack, but we're trimming into it anyway, because you want that positive slippage. And what we know is we know where supply is and we know where demand is, which is what? Demand is where you have support. So we know it's down there, staying short. Looking at the NASDAQ made a decision, and you can see that decision right there. This is when we were talking about NVDA, and you can see where you're at right in there and how that was going. When we posted, it looks like 426 at that point. And then you can just kind of see this stuff at the end of the day. But in the live alerts and what we were doing, and these are trades from earlier, but I'll just leave them up. But if you take a look here, we did a little scalp on the long side when the news first hit. Did okay with it, but the short here really worked and played out very nicely. And then we had puts and stock, and then we just all the way down just kept getting out. And then the puts were up 100%. I just closed everything at the end of the day. But what I'm doing on the way down, we should get into this, is I'm getting positive slippage. So I break and I'm closing and trimming. I'm not waiting to see if I'm wrong. And then I break and I'm closing some of the portion and I'm trimming. I break. And then when I do that on that third one, what I usually do is set what I refer to as a drop dead level, where I will get out of the trade. And what I'm looking for is 265 is what I said in there. If you go and take a look, and that would put you at 265. We never got there, and I just closed it at the end of the day. Patience pays, guys, on days like today. Now, what does this mean for you going into tomorrow? I'm going to clean all this off and be completely blunt. I don't know how you could look at that and think that you don't have the chance of a gap fill. I really don't. Now, we held here before that we could bounce, okay? We bounced off that 261 here, and maybe we do it tomorrow. And if we do, we're going to look for a reversal. I'm not going to look for a long, but maybe I'll wait for it to rally into the short. I'm looking for this to fill that gap. Usually, if you're going to fill a gap, it happens in the first 11 days. I'm looking for that to happen. Intel today, I'm not going to have time to get into it, but we had a short in Intel today. Goldman had a call, and they have a sell on it with a $28 target price. We did it right off the open. Out around 35. We did not hang out. We waited. We did this with options too, and actually did quite well with this trade. And we did this with options, and it did okay. But off the open today, it was pretty crazy, and you had very light volume. But you're seeing this. So the sell from Goldman, what we're seeing technically out there, we have to put the brakes on here, guys. We have to put the brakes because it doesn't even matter what sector you're in. They're all starting to crack. Even the ones that I want to buy that looked great today, I wanted to buy spot, but I put the brakes on because I love this position. I love what happened just because of what's happening in the equity markets. It's not realistic for these names to go up if the Nasdaq's going to come down. I hope this was helpful. Please comment on how raw this was and how specific I was dealing solely with technicals, because I think technicals are what's going to matter tomorrow. For those that know, you're aware of the stool. That's it.